All right, hello, welcome. 10 seconds early, I don't care. I know I said I wasn't going to present this morning, but I am. I don't think it matters at this point. As I go live, just had the release of jobs numbers for the first time since August, I think. I don't know, right now it is causing quite a bit of volatility. And the numbers do look, so hourly earnings are down. Average hourly earnings year over year are up by a tiny little bit. Yeah, they're stagnant. Yeah, let's look at the numbers. I don't know. According to an article I read earlier, the numbers wouldn't really matter much because the Fed is not going to use these numbers now. They're very delayed. This is old. But it might have been the excuse the market needed to pop. I don't know. I don't think it will last. Anyway, yeah, let's take a closer look at these numbers. See if we can glean anything. Average weekly hours stayed the same. Labor force participation rate. So lots of jobs added in September. Double what they originally thought. But in my opinion, that's bad. That means we're not going to get more liquidity into the system. The Fed's not going to cut rates. If their mandate is to cut rates to help the labor market, and the labor market's fine, you would think that would be bad news. But it's a double-edged sword. Or maybe that's a bad analogy because it's good. It's good that people are working and have jobs. But average pay is not keeping pace with inflation. And you're seeing that in consumer confidence. I don't really know what to make of these numbers. The rally's already dampening. We'll see what happens. But in other news, yesterday kind of screwed me a little bit. Screwed my plans up. I was shorting all the tech giants. I originally had plans to take off some of those shorts before close yesterday, just in case Nvidia popped a lot, and it did. I don't understand why, because the numbers were not that great. Let's take a look at that quick. Wow, they're up a lot in the pre-market. But their last earnings, surprised by 4%. I don't know if these are billions of dollars but they surprised by quite a bit. Now you go to yesterday, it's actually less of a surprise. What drove their most recent spike was a surprise of like 9, almost 10% over expectations. I don't know about you, what you see. I see some slowing. I did an analysis yesterday of all the earnings and the reaction in the markets before and after earnings for NVIDIA. Basically since 2023 when NVIDIA became a huge part of the market. And a lot of their major surprises were early on. And everything since then has been kind of muted. I'm mixed. Even the entire time when I was along for the ride in the AI, I remember thinking, what is this being used for? I don't know if I would have thought the same thing in 1996 with the internet. But everybody was clamoring to get the internet in their home. And I remember as a kid doing everything I could to connect at any moment to the internet. Even though there wasn't a lot of things to do then, it just, you wanted more, you wanted faster, you wanted to be able to connect without having a phone call come through and ruin your connection. I don't really see the same with AI. So, and I know that's not a real good reason to short. That's anecdotal. But who's buying this stuff besides other AI companies? And I don't think that beat yesterday was enough to completely get rid of those doubts. But what it is making me do is start to doubt myself. First of all, I got a really bad entry on my shorts. I should have waited. I basically shorted, this is the daily chart of the NASDAQ, M&Q. I shorted around the 7th when we were down here. And that's even while I kind of knew that we would recover from that a bit. I just was working all week long on creating a list and figuring out how much money I wanted to put into it, how exposed certain companies was to AI, what amount I was going to put into CoreWeave, or what amount I was going to put in AMD or Microsoft. And my hedges, I spent more time on the hedges than I did on the AI companies. And I just wanted to get it done. So that's a lesson to anyone out there. Just, you can set up all your trades and make a list and then do it later. But again, I thought I was going to doubt myself. I thought I was going to see a rise later and think, well, what's the point now? And forget about it. We've all been there where we decide not to do a trade and then it works out. You really should have done it. But one thing I'm sure of, if I was, even if I loved AI, looking at these charts, that would make me a little bit afraid. a little bit weary. On the S&P, we are now back above the neckline of the head and shoulders. That does happen often. You might even get another arm. We will see. I think there's still a lot of doubt about it all. But you could have said that 2 years ago. I understand that. That's why you hedge. Basically, right now, I'm upset because I set certain goals for myself. So if you're new to trading, set goals. Take a look at 6 months from now and say how much you want to earn by that point. And give yourself a punishment. I know it sounds juvenile, but punish yourself for not reaching that goal. Instead of relaxing for an hour at night, spend that hour learning something about trading. That'll be your punishment, quote unquote. All right, let's take a look at the news. At least I'm not where I used to be, and I would search out in a fever pitch all the negative news I possibly could. All right. Let's check out the headlines in Yahoo. Okay, so the other article I read said jobs data won't really be important. Now this one's saying it should. And again, I don't understand off-the-chart sales. All right, this is what bothers me. I know you should always look at the incentive behind articles. And you can easily see this puff piece. Even just from the title, you can tell it's kind of a puff piece. You have to wonder, are they just trying to get a good exit? If you haven't known, Jensen has been selling off his shares quite a bit. It hasn't really been reported on. But let me see if I can bring that up right now. See if this says anything. Is this total insider trading? I wonder how far back we can go. This looks bad. Huh, that's neat. Can I look for a specific stock? So maybe he hasn't been selling lately. Now he sold a lot earlier this year. So that's the thing. I don't know if selling really is a good barometer. Because they can just as easily, like Elon Musk does all the time, borrow against your shares and use that as money. Yes, even the richest people in the world are heavily in debt. Where can I... It's sad. I'm a member of this site and I don't even really know how to use it. Okay. There we go. Insider transaction discretionary trade summary. Yeah. Look at that. Since the end of September, I think that was around the highs. Look at this. Everything he's sold lately. $125,000 shares. 40 million, 23 million, 5 million. Wow. Must be nice. But notice how there's not... This is a lot easier to use than Edgar. I mean, he sold a lot too, going back quite a while. There's not a lot of buying this whole year of insiders. Let's include politicians. So a politician is buying not a whole lot. Yeah, let's exclude politicians. Let's look at the last time insiders bought. Are you kidding me? 2020? That can't be right. So last time anybody that was inside Nvidia bought shares was in 2020. All right, so maybe it's not as weird as I thought. But the whole point of me bringing that up was to say they could be doing good PR for them to boost up the price so that more insiders, more, not just insiders, people well connected, have a good price to sell at. Uh-oh. Let's look at this. Let's read both of these articles to see what happens. See what's there. And as I'm doing this, the NQ is getting a nice boost. I don't understand why. I thought a good jobs report would mean no go on rate cuts. Let's see if there's any. So it was so good that it doesn't matter, I guess, now. Plus, this is now political. I mean, it's a Bureau of Labor has always been political, but I would not really trust those numbers. In fact, ADP has been putting out numbers against that. U.S. economy added 119,000 positions in September, data from the Bureau of Labor Statistics showed Thursday, offering a boost to the labor market as broader concerns about a slowdown have left Americans on edge. The unemployment rate, meanwhile, crept up to 4.4%. Wall Street economists had expected the month's jobs report to show job gains of around 50,000 positions. The report was initially scheduled for release on October 3rd, but was delayed by the government shutdown that ran from October 1st until November 12th. Data from private sources, which provided some insight during the pause, had suggested the labor market continued to sputter in September, with payroll processing, I just said this, ADP reporting that the private sector shed 29,000 jobs. Again, do you trust it? Again, that's what you're going to see in the comments. Nobody trusts the numbers. But the market seemed to like that. I know, it sucks for me even more. Normally the data is reasonably be trusted. I wonder how many times people are going to say Trump in here. However, with the changes in leadership, I mean, how were you not leery before? All right. Yeah, I don't want to get into that. I haven't trusted those numbers for a long time. So, Nvidia disappointed as China business falls flat amid geopolitical turmoil. Nvidia's China business faltered in the AI chipmaker's third quarter as a trade war with the US rolled on. So this is the one bad thing in Nvidia's report. I think they're maxed out. Alright, let's read this puff piece. Nvidia stock jumped after the chipmaker reported its third quarter earnings on Wednesday, beating analyst estimates on the top and bottom lines and offering a better than anticipated outlook. How many times in the past did they beat and it fell flat? For the fourth quarter, Nvidia projects revenue of $65 billion plus or minus 2%. Wall Street was expecting revenue of $62 billion. Let's see if there's any counter arguments here. Again, I always go back to the dot-com bubble. We scaled way too quickly in the dot-com bubble, but everyone knew there was serious applications. There was real-world applications for the internet. Ahead of the earnings announcements, Peter Thiel's hedge fund sold off its entire, roughly 100 million stake in Nvidia. That's peanuts. SoftBank Group also unloaded all of its Nvidia stock, valued at $5.8 billion. That's a bit more. And they say they want to fund their own enormous AI bets. What are they going to start their own company? Their own startups? I think that's just fluff. I think they made that up to not cause a crash. Okay, this is a very common thread now in the people who are very, very positive about AI. Doomsayers keep chanting AI bubble, AI bubble, AI bubble, but they can't say what the so-called bubble is predicated upon. No, they absolutely do say. The round trip spending, the fact that it hasn't even gained any profitability in the actual markets yet. It's just spending right now. If AI technology had no intrinsic value as generating losses, then sure, calling it a bubble would make sense. It is generating losses, huge losses. How do you not understand that simple? I don't know why this becomes, for so many people, like a civil war. Like you gotta pick one side or the other. I don't know. I'm staying in my shorts for now. I'm going to do everything I can to hedge them. Let's see what... So you have to remember, news is always behind. You see the articles change in real time. Like this always on either bar chart or any of them, any news site, bring it up. They'll say stocks rally before the open on this reason, this reason, this reason. And then if it's not true, let's say all of a sudden they fall in the overnight, they'll just change the front of it. They'll just say stocks falter before the open on da 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 da. They have no idea. This article I find interesting because it all comes down to liquidity. It's actually very strange that during quantitative tightening, which we've been doing for the past couple of years, now bear with me, I just am learning about this more now. But the Fed has been pulling back liquidity by raising interest rates. Now, other factors cause liquidity as well. And from what I understand, that also pushed up the market for the past year and a half, despite the Fed's pulling back liquidity. I don't think they're going to keep... Let's read the article. I'm still a little bit confused by the whole thing. Well, I'm going to read this on my own. Nobody's watching anyway. I think I got what I wanted out of this stream today. More doubt. I have to get to work. But let's take a quick look at the charts. That's why I'm here. That quick pop in futures seems to be sticking for now. We'll see. There's really nothing up here besides the pivot point. We're already above. This is the NQ. We're not yet above the level where Monday's high. That'd be something to look out for, as far as also last Friday's high. More importantly, let's take a look at gold. Kind of going nowhere, but staying above yesterday's low. I assume gold took a hit yesterday because people were pulling out to put money into AI. Let's check oil. I drew this triangle yesterday. Ah, shoot, I gotta change contracts with oil. I forgot. Alright, let's take a look at VIX. VIX is trending down again. Into an area I now feel comfortable scalping again. Sub 20 is my favorite place to scalp. See what's happening with the dollar. Dollar went down a bit at that news. Alright, that's it. I gotta get to work. I don't know if I'll be here tomorrow. Good luck, goodbye.